Welcome back, everyone, to another edition of Anatomy of a Trade. I'm Franz Herr, and Roman Bogomazov is with me today, and we're going to talk about a trade in GC, the gold futures, that was done by a student in the summer session of WTC2, Evgeny. So take it away, Roman.
All right, well, let's look from left to the right to the point of our first trade. So we obviously have a bullish environment. We don't see the whole chart here. So the beginning of the session, we don't see the volatility increase. There's definitely whatever the structure is there before on the intraday basis, we would be thinking a change of behavior. We would be thinking a structure here that produces the effect as the reaction into the area of the support. Then we have grinding through price action. Kind of reminds me of like this bullish feather where supply still comes in on each reaction, but that supply is gradually being absorbed. So we're coming into the excuse me, idea of getting to the resistance level and possible extension up. So I would say almost kind of like the first thought about this. We usually don't necessarily overcome and go up, especially with this type of energy here. Like there is no really like good demand. Neither a really great demand is coming in this area right here. Everything what was done in terms of the aggressive buying was early on during the session. So I think that this character assessment might not, suggest that the extension is going to be too much. It probably suggests in itself that yes, we're still bullish, but at the same time, we just overcoming the previous high that took us all of this time, to consolidate. So with that, there's going to be probably an attempt to overcome and then still some kind of testing. This is what we're seeing here. So if we were to approach to this trade with that perspective, Franz, I think it would work out a little bit better. We probably would be thinking about like, stop losses movement and just getting out at the first signs of the possible reversal or some kind of short-term break of the trend. I mean, I think this is kind of like the last bar for us to consider getting out, like at the break of this local structure. And then that at least increases a little bit the efficiency of our trade. It's not big, I understand it, but these are the circumstances of the thinking that we have had at this moment, and that would save us a little bit from the exit lower at the lower level.
Great analysis, Roman. A couple questions. Well, maybe one observation first. If you draw that resistance line across from the initial, where the initial change of behavior took place, potentially we could be looking at some sort of an apex formation there. And so my first question is, when we get an apex, the initial breakout sometimes can be a false breakout, first of all, or there's another test coming, in my experience anyway. And so I'm going to ask you if you agree with that, if you might see that as a potential observation for the timing here.
Yeah, character of the breakout. What kind of the character would we have? Usually, what is this in the apex? It's all inactivity. So this is where volume goes down. So on the breakout, we usually want to see that increase in the volume signature. It's really hard to see because of this spike right here.
Yeah,
there is something there, but is it, akin to maybe this comparison or to this comparisons? And it seems like it's probably the hardest to go up. So I like your idea that we're attempting to overcome this apex, and character kind of suggests that we could have the reaction. So again, it's just more kind of like advanced understanding of the efficiency here, that we could have exited a little bit earlier on this bar than on this. By the way, I was just discussing today with some of the intraday traders the whole concept of the efficiency on the intraday level. Usually we would go and we would think about the price efficiency, we would think about the time efficiency. And then I brought up to their attention that there is also an efficiency in the opportunity. Like if you exit here mentally, you're done with this trade. And mentally, you could start concentrate on the next idea, which was actually really good for us. I like,
Yeah.
this whole idea of kind of like, yeah, we're not as strong here, so we're gonna have a reaction. This reaction is still counter to the trend, so therefore limited in size and limited in targets. And if you enter it out of this consolidation here, let's say somewhere here, mentally, you are more efficient if you close your position before. Sometimes I'd say sometimes one trade originates another, or sometimes one trade originates the next mistake. And that's kind of like what we're seeing here. Yeah, so this early non-exit originated, the late entry to the next good trade. And that's kind of like how it happened here. So once you have this awareness of like, I'm doing this, then the key is just to develop the skill to recognize what's happening earlier on, and then to develop the skill to execute that recognition as well. Those are two different things. And Franz, what about the next trade?
Well, and I'm seeing a long and a short and then another long. And the second long trade that occurs there looks to me like a pretty good read, Roman. I'm seeing after this initial breakout, which fails from the apex, and then we come back and we're thinking, well, what kind of a test of this breakout are we getting? And it's very, very minimal. And then after there's a little attempt to go up, there's a second attempt to bring back the price down that has very, very, very extremely low volatility, extremely low volume. And I think right here is a really good read on Evgeny's part for an entrance into a potential swing. So that's what I'm seeing. What do you see, Roman?
Yeah, absolutely. So we still have not changed the bias. Up, confirmation on the way up, reaction test, confirmation, confirmation. So we're still in the bullish bias. This is a really good recognition. I'm thinking like here, we are not available, so we're starting to trade here. So we kind of have to adjust. I call this like the crisis management trade, and where like, yeah, I'm not at the best spot here, so I need to understand what I can extract. Is this kind of like a scalping trade? Probably that's what it is. Then I have to be more efficient. This was a good idea, and this was a great idea, because now we are in the trending trade, and we could just use our trending techniques to get out. So what do we do here? So I'm assuming 1 unit. Yes, 1 unit. Really good profit here. So profitable for the session, and this is obviously what's important. So the goal for our intraday traders is just like be profitable each day. And you could take this under your belt as well. But here, I think that we're seeing some supply, and sometimes that produces that anxiety to get out. Right away, look at the result. What is the downward result? And if this is still in line with like the last significant bar, you still could, increase your efficiency and get a little bit more. So I'd say like I'm nitpicking here. I'm absolutely okay with the entry. Exit could be, Evgeny, slightly better. And again, you just know me already, so I'm gonna go into that, nitpicking, but that's what I would do. France, otherwise, a great trade.
Great trade. Well, why don't we take a look at the post analysis, Roman? First of all, the visual recognition, the bias, correct. It's definitely up. And I like the idea that there was that counter trend trade right after his initial attempt to the long side, and then switching again. I think that takes some real mental, like flexibility to be able to be that adjustable. And I think on the intraday time frame, you really need to have that. The timing, he's giving himself 75% on that. Character, I would say that the character of the last swing is definitely good. So, Yeah, the points of entry, generally pretty good. So he's giving himself 3 out of 4 on that. Using a stop loss, definitely. No add-ons, no trims, and the exit a full point there. And what we're saying is 1.7, 1.75, 2.75, 3.4.5, 5.5, 6.5 out of 8. So I think the variance that we might grade him on these trades might be a little bit higher than 56%, probably closer to 75 or 80%. Would you agree with that, Roman? In terms of,
Yeah, I would agree with that. There is definitely, in terms of all of the ideas, I mean, like up, down, up, the bias was absolutely spot on. Execution here was spot on. I'm going through this, some of the notes here as well. Correct on this. We've talked about this. Correct on this. So there is a recognition that there was no exit on this bar. So again, the measurement of a good trader is not just in the technical way of how you trade, where you execute efficiently your points of entry and points of exit. It's in your mental capacity to be aware about your mistakes. If you don't have that, then I automatically know you are not at a very high level. So you've gained a showing ability to be aware of the mistake here. Also, I like this close of the third trade on time, and that's under the best practices. I like that there is a recognition. So this is your trim. Divide position into half and then exit here on with the just by the stop loss. And then you give yourself an opportunity to kind of catch a little bit more and optimize this exit a little bit more. But otherwise, really great trading.
very nicely done. Well, there is our review of Evgeny's gold futures trade, and brings to a conclusion another session of Anatomy of a Trade. So thanks, Roman.
Thank you, Franz, and thank you, everyone.
Till next time.